Yo, what's up, Black Dot? Once again, back in the booth, back in the studio, bringing you out True Black Dot Media 2010, back with another issue. My issue today is going to be a reference to an issue I want to talk about, and it's about foreclosures in the Black community. I've been going over some statistics, some numbers in reference to. I've been going over some numbers in reference to foreclosures in the United States and how they're affecting the Black community. And actually, there's been over 2 million homes foreclosed on in 2008 and 2009, and that's pretty high. Over 300,000 foreclosures every month. 300,000 foreclosures every month in the United States. And actually, about 47% of Hispanics and 48% of Blacks who bought homes, they qualified for FHA loans, but they were given subprime loans. Now, a subprime loan basically is a loan that the customer or the client is going to pay higher fees on, and they're going to have a higher interest rate. Now, even if they do, it says here that a lot of times when Black or minorities, I don't want to use the term minority. I want to say people of color, Blacks, Hispanics, when they usually go into these different mortgage companies, and they're dealing with usually mortgage brokers, they might qualify. They might have a credit score, high credit score, and they might qualify for a FHA loan, but they're being given subprime loans, conventional loans. So basically what's happening is they're sitting down and the loan officer is going over the credit report with them, and a lot of times they are being suckered into accepting a subprime loan, and they qualify for FHA loan. Now, let me explain something. FHA loan is the best possible loan you can get. Now, that's backed by the government, and a FHA loan, you're going to get the best possible interest rate, okay, compared to a subprime loan. You're not going to have a lot of fees with the FHA loan, and you're going to have a great interest rate, the best interest rate you can basically get. Now, a lot of times when people go into these mortgage companies, they don't really understand the whole process as far as getting a mortgage. Now, I got a few relatives that are in that line of work, dealing with mortgages, and it's interesting to me because they talk to me about, how customers come in and they, might have a good credit score, but a lot of times what happens is a lot of these loan officers, what they'll do is they'll talk to the customer, steer that customer into accepting a higher cost loan, which would be probably a subprime loan, and a loan where you have like a 2-year ARM, 2-year adjustable rate on that particular loan. Now, and that's how a lot of loan officers make big commissions, because they steer customers toward higher cost loans where they can charge more broker points on the back end of the loan and on the front end of the loan. Now, they broke it down to me. Basically, they told me that a 2-year adjustable ARM is going to adjust after 2 years. Now, you might qualify for, say you went into the loan officer's office and you got a loan, you got approved for a loan, say, $150,000 loan. Your payments, say, $1,200. Now, if you get on a 2-year adjustable ARM, after 2 years, your payment is going to go up if you don't refinance that loan after 2 years. Now, you're going to have a fixed payment for 2 years. Then, after 2 years, I would say after that, 23-month period, you're going to have to decide if you want to refinance or deal with the payment that's going to go up. And, it's going to adjust. That's why they call it adjustable 2-year ARM. Now, they explained to me that a lot of times loan officers, they don't fully explain to the customer that that loan is going to adjust after 2 years, and that they would need to refinance the loan before the 2-year period is up to take advantage of a better interest rate or a fixed interest rate, 30-year fixed interest rate, or 15-year fixed interest rate. That way they will avoid having adjustable payment adjusting after 2 years. And a lot of people, they don't get the full information that they need at closing or during the whole process of the loan. And after 2 years is up, they get a statement and their payments shot up. And they're wondering what happened. Why did my payment go up? And they're calling the mortgage company asking, hey, why did my payment go up? And then, I'm pretty sure they then find out that, hey, you're on a 2-year adjustable arm, and your payment was due to go up after your 2-year period was over with. And a lot of times these people, they just don't get the full information from the loan officer when they go in to get these loans. And this happens a lot in the Black community. A lot of these loan officers out there are not fully explaining the whole situation as far as adjustable arms. And that's been one of the biggest problems with foreclosures, these adjustable arms that people are being put on. And they're not being fully told what's going to happen, what you need to do before your 2-year period is up, to avoid any kind of confusion and surprise on the customer's part when they open their statement and find out the payments shot up a couple $100. That's why people get into foreclosure situations. So to me, my thinking is that a lot of these loan officers, they don't care about, I'm not saying all of them, I'm saying a lot of them don't care about the customer's well-being as far as their loan is concerned and what they're going to face after a 2-year period is up. They're just concerned about how much money they're going to make off their commission. How much money they're going to make off that loan, how much their commission is going to be, off that particular loan. So people who are looking for a home, looking to get into a home and need a mortgage, a loan for that home, I think you need to really consider FHA. FHA is the best possible loan you can get. And when you go into the loan officer's office, you need to make sure that you ask them, do you qualify for a FHA loan? Okay. If you have good credit, you got good credit, make sure you should be getting an FHA loan. Shouldn't be led to believe that you qualify for a subprime loan, which you're going to pay higher fees on. You're going to have a higher interest rate. So make sure, if you got good credit, ask that person, hey, I want an FHA loan. I want the best possible interest rate. I don't want a 2-year adjustable rate loan. And one more thing, make sure you check the current mortgage interest rates before you go in to talk to about getting a loan for a home. I think right now, last time I checked, which was actually yesterday, rates for at FHA 30-year fix. I think it was at 4.8 or something like that, 4.9 on the interest rate. That's on a 30-year fix, and that's FHA, 30-year FHA fixed loan. So just do your homework and don't get caught up in a 2-year arm, because these arms, adjustable rate mortgages are destroying property ownership in the Black community and putting people in situations where they have to possibly foreclose on their home because the payments have gone up, and they didn't know what kind of loan that they had. So make sure you read the paperwork and know what you're getting, what you're signing at closing. Know what you're signing during the process of the whole loan. Know what you're getting into. This is Black Dog Media signing off. Peace.